Hello and welcome to the Vtrender Education program. My name is Shai and I'll be walking you through the steps required for you to have a better understanding of market profile and order flow of the kind we use at Vtrender. As we get started, I just want you to be very clear about what we are going to be going through over here as we pursue this online medium of learning. For us at Vtrender, a learning process simply involves having a trading idea. This trading idea has to be profound. It needs to be robust. Okay. So you got to have a system which is unique to you and which you know a lot of other people are not in the possession of. It has to be robust in the sense it has to be working in all kinds of situations. Okay, in up markets, in down markets, in sideways market, it has to be standing the test of all that the markets are going to be throwing at it. Okay, assuming I have such a system in place, I have to be able to demonstrate the effectiveness of the system to you for you to learn it as a process. Okay, I have to be in a position to explain it to you. Okay, and then when I explain it again to you and you understand it, I have to be in a position to demonstrate it again slowly to you. This is a typical learning process. You demonstrate, you explain, you re-demonstrate slowly. Now the process of learning is slightly different from what we call a mastering the process. Here, if you're wanting to master something, then you need to get very good at it. So you have that same trade idea. Okay, what you do next to master it is you imitate it. Yeah, and once you can imitate it, you test it in a live situation, okay, with of course real money. When you're testing it, you have to be in a position to be mentored about it. Okay, this is about how you master the process. And once you have a mentor and you have a test running, you get results, you have to be in a position to retest it. And once you can retest it, you have to review it. This is the way you can master a process. Now you will find thousands of strategies out on the net, on YouTube. Okay, if you start Googling, you will find a lot of strategies, okay, which are going to be explaining to you about a learning process and about mastering a process. This, what we are doing, is not one of them. Over 10 years, I have been with Vtrender. I have mentored a team of people who have gone through this step 2 of mastering the process. Through this same process which I've highlighted over here of test, of imitating, of testing, of mentoring, of retesting, of reviewing. Traders, to get through this process, have to be very good at what they are. Okay, at Vtrender, we have an environment in place for you to master the process of trading. This is not a place where you would come and expect to make about 2,000 or 4,000 rupees per day. Okay, if you have come here with that kind of mindset, my advice to you would be to stop, to go no further. We are here working with traders who are passionate about trading, who want to trade for a lifetime, who want to make a career out of trading. Okay, because what I say about careers all the time, and I've said this 100 times before, is that careers can neither be gifted, neither can they be sold, neither can they be bought. You have to put your effort in it and you have to engage, okay, with that process for you to become a master of it. At Vtrender, we have a path for you to master it. But before we get to mastery, we have to start with the learning process. And to begin with the learning process, you have to have a little bit of perspective about where things are, about where they are placed. I know some of you are well versed with the markets, but you would have to take a step back and allow us to begin from the roots up. And when to have a perspective, the most important thing you would learn is to have a context which is ready. Okay, so we are good to begin. Let's see, okay, what kind of perspective and what kind of context we have as we approach the world of trading. On my charts, on my screen, I have these two instruments which are plotted next to each other. So on the left hand side is one single instrument, on the right, okay, is a different instrument. And what you can see on your chart right now is instrument which is going down, right? So from the left to the extreme right of these two charts, you would have price sloping downwards. But here's the interesting thing. At the extreme right, you have a big green bar popping up. Now, assuming, okay, the markets were here and they closed, okay, at this bar. Looking at this green bar, what would your thoughts be? Would you be thinking that the downtrend has ended, a new up move is about to begin? Well, we don't have the benefit of the further few bars to understand what really happened, but just looking at this one bar would at least, okay, allow us to assume, okay, that there could be a fresh uptrend in place. Of course, okay, there is not enough information to arrive at that decision yet. But going on, let's actually see what happened. So this is what has happened to those same two charts after that big green bar showed up. This is that green bar which was there highlighted in the previous slide, and you can see the instrument on the left is continued going up. The instrument on the right with that same kind of green bar continued going down. What happened? What changed? When we were looking at that single green bar at the end of that chart in the previous slide, the green bar was almost identical, yet the chart on the left is moving upwards and the chart on the right is moving downwards. At this point of time, if you were to make a trade out of it, okay, you would have won. If you were long based on that green bar, you would have won in one instrument. You would have been a successful trader in one instrument, and you would have given up that money on the exact on the same instrument with the exact same strategy. Yeah, but that information which was prevalent in that chart at that point of time was not enough for us to make a logical trading decision. Let's add some information to the chart then. Okay, so on this chart, the left hand side, I've added certain blue horizontal bars to the chart. There's nothing else, it's the same chart, and the green lines, okay, which you see are an extension of those blue bars. The blue bars which I've added to the charts are what I call the point of control, or simply put, it represents the period, it represents the area where the maximum volume was transacted in that bar. Okay, so you can see the maximum volume was transacted at the bottom of these bars over here and here as well. Okay, maximum volume has come at the bottom of the bars, and after it has come, the charts have put in fresh uptrends. Let's look at the other chart. Let's see what happened. The same chart on the right, which was sloping downwards, we had that big green candle which was here, and I've plotted that big volume POC on that bar. But have a look at the position of the POC. It's at the top of the bar. It's at the top of the bar in this pink candle as well. And because it's at the top of this bar in this third candle as well, and because that volume, the highest concentration of volume came at the top of the bar, this particular chart continued sliding downwards. right? So just a little bit of extra information we added to the charts, and we could make immediate assumptions about what the chart would do next. We work with market profile at Vtrender, and for us, the market profile approach is looking at the markets in a three-dimensional way. Most people would be looking at charts actually only for price and derivatives of price. They do not go beyond PRICE, and they ignore everything else. They have a one-dimensional approach to the markets. And this one-dimensional approach is the reason why a lot of traders, especially in derivatives, are failing today. So market profile is a three-dimensional approach to the subject. So you have price, you have volume, VOLUME, and you have time. Okay, and together price, volume, and time, okay, would tell you all about what the market is doing or is gonna do next. Okay, let's go back and look at that chart which was climbing up. Okay, now if I were to tell you that all this profit, okay, assuming okay you bought okay with those big collection of buyers at the lows, all this profit you could have made with this information of this POC at the bottom of the bar, okay, and would have explained to you the conditions, okay, for entering at that point of time, as also this, okay, all these guys are happening. Would you think okay it is a robust way of looking at the market? Let's go back okay to that slide okay we discussed earlier, the learning process. Okay, I did say that you have a trade idea or a trading system which is profound, robust, and I can demonstrate to you and explain to you and again show it to you how it can work. But here's the thing, being shown what has happened in the past is not profound. It's the simplest thing which you can show in a trading book. They say hindsight is 20/20 vision, and a lot of traders are shown charts of what has happened without them being told about what to do as it is happening. But if we were to show you the why and the how and demonstrate it to you with live examples, with an explanation in a live moving market, would you think that you had a big edge in your understanding of the market? Well, you know what? We do it every day in the Vtrender trading room. Every single day we do it live in the Vtrender trading room. And this is our trading room. This is a place where our community comes together. Most traders struggle at trading because they are working with outdated concepts. Just the information from an open, high, low and close is no longer enough. There are about 200 indicators which are based just on the closing price of a bar. It's arbitrary. It's information okay which is no longer valid. What is the importance of the closing of a bar anyway? And then they make crossovers and they make strategies and they draw trend lines based on where the bar is closed. That kind of information is outdated, and that's why a lot of people are failing in the derivatives world today. To succeed at derivatives, you have to evolve because the trading world has evolved. So if you want to take a peek inside at what the new methods of trading are, we have a place right for you. It's at Vtrender. Thank you for listening in, and we'll follow up on this video with some more examples.